In a recent bombshell interview, billionaire investor John Paulson, known for his infamous bet against subprime mortgages, has made a shocking prediction about the stock market's future. Paulson has revealed a drastic financial move he plans to make if Vice President Kamala Harris wins the presidential election. Could this be a signal for investors to prepare for turbulent times ahead? Stay tuned as we dive into why Paulson is planning to pull all his money from the stock market and what this means for the economy. John Paulson, a Wall Street legend whose $3.8 billion fortune was largely built on his 2007 bet against the housing market, has sent shockwaves through the financial world with his latest remarks. Speaking on Fox Business' The Claiming Countdown, Paulson revealed that he would pull all his assets from the stock market and move them into cash and gold if Kamala Harris wins the presidential election. His reasoning? He believes that Harris's economic policies would generate too much uncertainty, likely leading to market volatility and a potential recession. Paulson has been a staunch supporter of Donald Trump's tax cuts, which, according to him, benefited the average American and spurred economic growth. In contrast, he warned that Harris's proposed tax policies, including raising corporate tax rates and imposing a 25% tax on unrealized gains for high-net-worth individuals, would create panic among investors and trigger widespread selling of assets such as stocks, bonds, and even real estate. Paulson's concerns are rooted in Harris's plans to let Trump's 2017 tax cuts expire. The billionaire investor emphasized that raising the corporate tax rate from 21% to 28% and the capital gains rate from 20% to 28% would severely impact the market. But the most alarming proposal in Paulson's view is the 25% tax on unrealized gains for individuals earning $100 million or more. This unprecedented tax would hit major investors hard, causing them to sell off their assets in droves to avoid massive tax bills, likely resulting in a market crash. Paulson predicts that this could trigger an immediate and severe recession, as markets would lose confidence and sell-offs would accelerate. However, some may argue that Paulson's predictions are overly pessimistic. Fox Business host Liz Claman pointed out that similar fears arose when Barack Obama was elected, with some investors pulling out of the market in anticipation of a downturn, only for stocks to perform exceptionally well during his presidency. Paulson acknowledges this point but insists that the difference lies in market timing, adding that he's not willing to take the risk if Harris wins. He explained that while timing is everything in investing, he prefers to err on the side of caution, choosing to move into safer assets like gold and cash to protect his wealth from what he sees as an impending economic storm under Harris's leadership. But Paulson isn't alone in sounding the alarm. J.P. Morgan Chase CEO Jamie Dimon recently shared his own concerns about the U.S. economy, saying that the worst possible outcome could be stagflation, a combination of stagnant economic growth and high inflation. Dimon warns that the pressures of inflation, combined with higher deficits and government spending, could be disastrous for the U.S. economy, even suggesting that the odds of a recession are greater than those of a soft landing where inflation cools without triggering an economic downturn. Amid these warnings, Republicans have seized the opportunity to criticize Harris's economic policies, with a pro-Trump super PAC releasing an ominous ad that compares Harris's economic plans to a roller coaster careening out of control. The ad attacks Harris for contributing to the highest inflation in 40 years and accuses her of creating a crisis in affordability for everyday essentials like groceries, gas, and housing. The metaphor is clear. The ad urges Americans to get off this roller coaster before it's too late, tapping into fears about the economic future. But not everyone agrees with these gloomy predictions. Some financial experts, including analysts at Goldman Sachs, argue that a Harris presidency could actually boost the economy. A report from the bank suggests there are plans to support small businesses and middle-class Americans would result in job growth, increased consumer spending, and broader economic benefits. Goldman Sachs also predicts that Harris's policies would result in the creation of 30,000 more jobs per month than under a Republican administration, with industries like renewable energy and infrastructure seeing significant boosts. According to this analysis, the positive impact on small businesses and middle-class families would outweigh any negative effects of higher taxes on the wealthy and corporations. While the economic debate rages on, one thing is clear: the stakes for the 2024 election couldn't be higher, and the outcome could have a profound impact on the stock market and the broader economy. Investors like John Paulson are taking drastic steps to protect their wealth, while others remain cautiously optimistic. So, what does this mean for you? Could we be facing a market crash if Kamala Harris wins, or will the economy thrive under her policies? Only time will tell, but one thing's for sure, the financial world is bracing for major changes. Let us know your thoughts in the comments. Don't forget to like, share, and subscribe for more insights on how the upcoming election could affect your finances. Thanks for watching, and we'll see you in the next video.